Welcome to our guide for first-time auto loan shoppers. Today, we'll show you how to avoid overpaying, how to sidestep dealership traps, and how to control your true monthly cost. We'll focus on two factors that actually determine your success: who you borrow from and your total monthly obligations. We'll also explain why local credit unions often beat commercial banks, why a down payment might still be due even after approval, and why insurance can be the biggest threat to your budget. Finally, we'll conclude with a checklist and quick quizzes to lock in your knowledge. To begin, let's outline what's ahead. Here's our agenda. First, we'll cover why your lender choice, especially choosing a local credit union, matters. Next, we'll explore pre-approval and how it saves money. Then, we'll unpack the dealership payment trap and clarify when you still owe money at signing. After that, we'll examine insurance, which can exceed your car payment if you're new to driving. We'll then break down your true monthly costs and give you a practical checklist. Finally, we'll test your knowledge with quick quizzes and then summarize. With that roadmap in place, let's move to the big picture and why lender choice is so important. Big picture. What determines your success is not just the car you pick, but who lends you the money and what your total monthly obligations add up to. Choosing a lender with better terms can save you thousands, and planning for insurance, fuel, and maintenance can prevent budget stress. Now that we've set the stakes, let's identify the two factors that matter most. There are two critical factors. First, your borrower source. Local credit unions frequently offer lower APRs than commercial banks, especially for first-time buyers. This difference compounds over the life of the loan and can save you thousands. Second, your total monthly obligations. Your budget isn't just the car payment. It includes insurance, fuel, maintenance, registration or taxes, and possibly parking. Ignoring any of these can lead to financial strain. With those fundamentals in mind, we should add an important note about this information before we proceed. Disclaimer. This content is educational and not financial, legal, or insurance advice. Lender policies, state and country regulations, interest rates, and underwriting standards change frequently and vary by region. Always verify terms with your lender and insurer, read contracts, and consult licensed professionals where appropriate. With that in place, let's talk about where to start: credit unions versus banks. Start with a local credit union. Historically, credit unions offer lower APRs than commercial banks, particularly for first-time buyers. Your first tactical move is to secure a competitive pre-approval before you set foot in a dealership. Doing so gives you a clear budget ceiling, strengthens your negotiating leverage, and prevents you from being steered into high-rate financing or unnecessary add-ons. Now let's visualize the journey from pre-approval to driving off the lot. This flowchart illustrates the journey. You start by assessing your credit and budget, then obtain a credit union pre-approval. Next, you secure binding insurance quotes because premiums can be a major cost factor. After that, you shortlist vehicles and visit the dealer with your pre-approval in hand. You review the purchase order and all fees, confirm whether a down payment is required, and sign only if the total monthly cost, including insurance, fits your budget. Finally, the lender funds the dealer and you take delivery. Now that we see the flow, let's compare credit unions with commercial banks to understand the trade-offs. On the left, credit unions commonly offer lower APRs and member-first service, with flexibility for local borrowers and often fewer junk fees. On the right, commercial banks can be convenient if you already bank there, but underwriting may be stricter, and dealer-arranged financing may include rate markups. Sometimes banks run competitive promotions, but as a first-time buyer, you should still benchmark them against a credit union pre-approval. Having compared lenders, let's translate this into concrete steps you can follow. Follow these steps. First, check your credit reports and scores. Second, estimate a safe budget where your car payment is roughly 10 to 15% of your take-home pay, and your total auto costs stay under about 20%. Third, apply at a local credit union for pre-approval. Fourth, request the APR, term, estimated payment, and whether any prepayment penalty applies. Fifth, obtain binding insurance quotes for your top 2 or 3 vehicles, ideally using exact VINs. Sixth, confirm whether a down payment is required and the exact amount. Seventh, bring your pre-approval to the dealership and request an out-the-door purchase order so you can see every fee. Eighth, consider dealer financing only if it truly beats your credit union offer without hidden conditions. With the checklist in mind, let's address the dealership payment trap that confuses many first-time buyers. Here's the trap. Even if your bank or credit union approves the loan and funds the dealer directly, you may still owe a cash down payment at signing if your loan structure requires it. Only a true zero-down loan covers the entire purchase price. To avoid surprises, insist on seeing the cash due at signing on the purchase order, and confirm whether taxes, fees, and any add-ons are included. Next, let's quantify how these costs show up in your monthly budget using a simple comparison table. This table shows 3 sample scenarios for illustrative purposes: an economy sedan, a compact SUV, and a sporty hatch. Notice how the insurance premium can rival or even exceed the car payment, particularly for newer drivers who must carry comprehensive coverage. Fuel and maintenance add further costs that need to be included in your total. Totals range from about $750 to over $1,000 in this illustration. Now, to make these proportions more intuitive, let's look at a pie chart of monthly cost components. This pie chart highlights the relative weight of each monthly cost. Insurance can be the largest slice at 40%, followed by the car payment at 35%. Fuel might take 15%, maintenance 5%, and miscellaneous items the remaining 5%. If your insurance quote is especially high due to limited driving history, this slice can easily dominate your budget. With that perspective, let's go deeper into why insurance is the real threat and how to manage it. For many first-time buyers, insurance is the budget breaker. Lenders typically require comprehensive and collision coverage on finance cars, and for newer drivers, these premiums can exceed the monthly car payment. To protect yourself, obtain binding insurance quotes before you finalize your purchase. Ask about eligible discounts, such as telematics-based programs, good student discounts, defensive driving courses, and bundling home or renter's insurance. Verify the exact coverage levels required in your loan agreement, and recheck quotes whenever you change vehicle models, trims, or VINs, because premiums can shift substantially. With those best practices covered, let's test your understanding with a quick question. Quiz time. Question: which single step is most likely to save you the most money before visiting a dealership? Options: 1. Rely on the dealership to find a bank for you. 2. Obtain a pre-approval from a local credit union. 3. Pick a car first and worry about financing later. 4. Assume your insurance will be cheap. You may pause the video now to think about the answer. We will discuss the answer in the next section of the video. The correct answer is: obtain a pre-approval from a local credit union. This step anchors your budget, frequently yields a lower APR compared to commercial banks, and prevents you from being steered into higher rate financing. Now that we've handled financing, let's confirm what you've learned about insurance risk. Here's your second quiz question. True or false? It's common for a newer driver's required insurance to equal or exceed the monthly car payment. Options: true or false. You may pause the video now to think about the answer. We will discuss the answer in the next section of the video. The correct answer is true. First-time buyers and newer drivers often face higher premiums due to limited driving history, and comprehensive coverage is typically required by lenders. This is why obtaining binding quotes before you commit is critical. Next, let's map a simple timeline for your purchase week so you can execute these steps in order. This timeline offers a 1-week action plan. Day 1. Pull your credit and set a realistic budget. Day 2. Submit your pre-approval application to a local credit union. Day 3. Collect binding insurance quotes for each target vehicle. Day 4. Shortlist cars and confirm whether a down payment is required. Day 5. Visit dealerships with your pre-approval and request out-the-door purchase orders to see every fee. Day 6. Compare offers. Verify the total monthly cost including insurance and confirm no prepayment penalties. Day 7. Sign only if the entire package truly fits your budget. With the timeline set, let's capture a few key safeguards to remember. Keep these safeguards in mind. Secure your credit union pre-approval first. Obtain binding insurance quotes before you commit to a vehicle. Confirm your cash due at signing and any down payment requirement. Check the contract for prepayment penalties. And budget for the full set of costs, not just the car payment. With safeguards noted, let's summarize the big takeaways. Here are the final takeaways. Your lender choice matters greatly, and local credit unions often deliver better APRs. Pre-approval saves you money and strengthens your negotiating position. Even with funding in place, you may still owe a down payment at signing, so confirm the cash due. Insurance can exceed your car payment, so get binding quotes early. Ultimately, sign only when the full monthly cost aligns with your budget. As we wrap up, I have one last request to help others find this information. Thank you for watching. If this helped you avoid overpaying, please like the video, share it with a friend who's car shopping, and subscribe for more smart money tips. I'd love to hear your experiences and questions in the comments. Tell us your insurance surprises, your credit union wins, and any dealership tactics you encountered. Next time, we'll dive deeper into negotiating out-the-door pricing and protecting yourself from add-ons.